everybody. Welcome to your first show of the week. It's Tuesday. Happy Tuesday, everybody. My name is Merlin Rothwell. This is the TraderMerlin Show. Hope you had a great weekend out there and enjoyed some of the perks of our freedom, and for all those fallen soldiers that fought for all of our freedoms. Yesterday was one of those supposed to be enjoyable days, but it's a solemn day as well, especially for those who have family members who were lost in battle. So back to work. Shortened week for us, but market's off to one hell of a ripping start here as we get back to the new normal. What exactly that normal is, I don't have a clue. I have my opinions about it, which clearly are, at this point, totally wrong, and that's all right. We can have our opinions about it. We'll talk about that today when I talk about the return to normal. Of course, you guys feel free to send in your questions along the way. I don't have any guests set up for today, so it's going to be me and my horribly bad hair. Yes, I'm really waiting for a stylist or salon to open up around me. Unfortunately, none of them are opened up yet. So the new normal isn't quite there for me, but I'm looking to get back to it. Who knows? I thought about doing some kind of trader challenge where I would like shave my beard all funny or do something funny for you guys on the air, but who knows? I don't even know if I'll keep this facial hair. It might disappear soon. Anyway, hello, Not Bad Whiskey. All right, I hope you know that Fridays we have whiskey on the show. Hello, Big Ab, Chuck, Jorge. Letitia, good to have you with us. Harrison, Tomasina, and Mr. Barr. Yes, El Toro. I'm going to try to remember that, Mr. Barr, calling you El Toro every time I see you on the program. He sent in a very nice email this weekend, which will be part of the discussion for today. Macro versus microeconomics, and certainly talking about UCI's master's program and Peter Navarro. I don't like Peter Navarro. He stole my ideas. I'll tell you about that one in a minute. All right. Yeah, some places are open. You like the goatee, Thomasine? I think I should go with that. It's funny because I actually did a podcast last week for Josh Lilquist, which was a fun one to be on the other end of being interviewed. And he was just kind of rapid firing questions at me. And it was great because I was twirling my mustache on there, and I didn't really realize how long my mustache is. I've never had a mustache like this. I'm debating going the full German, with the big handlebars, and I can walk around the beer stein at Oktoberfest with the big... Anyway. All right, we'll go off my mustache etiquette. We'll go to the market update for today, which was damn bullish for most things. Here is your market update for what's today? The 26th of May. Almost done. Yeah, it certainly doesn't look like a sell in May and go away type of environment, even though it is historically the beginning of a downward slide. It hasn't been so far. So let's take a peek at what's going on with, I always do that. I always go to the wrong side, and now I'm flipping through all different numbers. There we go. Sorry about that little blip. We'll start at the bottom, work our way up. Now, Bitcoin has been doing pretty good recently, although the past week has been bad. You guys can see it slowly drifting down here on the daily chart. We got to that 10,000 mark twice. Very interesting for those of you who are Online Trading Academy graduates. The way that this hit 10,000 and then the next day gapped, this was because of the halving, which I talked about in one of the videos on TraderMerlin. You can go under the chart of the week, and I believe it was the May 9th or 11th. Chart of the week, I did about the halving of Bitcoin, which is part of the reason you saw this big drop here. People bought the rumor, sold the news, and now you're seeing that continued drift down. It's amazing the way it gapped down, rallied back up, which is a perfect supply level. I mean, this is one of the great things we teach in the classes is about that supply that was formed because of this type of gap. But today, looking a little ugly, down 3.54% on Bitcoin. 8,785 is where it closed at today, making it by far your worst performer on the session. Now, gold still teetering on that 1,700 mark, but a big down move today. 1,703 is where it finished at on today's trading session. You guys remember we were talking about it having this descending triangle pattern, which it broke out of on the, let me give you the exact date here, on the 14th of May. All in all, I think it still looks pretty good, although it's an aggressive move down. I mean, we were kissing highs of $1,775 just a few days ago, and here we are $75 lower at $1,703. Keep an eye on that 1,700 mark. After that, you'll probably see it drift down to 1,685, and after that, if it does get below, which I don't think it will, there are much lower targets, like I'd be eyeballing this 1,588 on gold, but that's a long, long ways away. The story of the day, I thought, actually was the NASDAQ. You look at the way these markets performed, they all were looking fantastic, looking really, really, really good. And all of a sudden, you had this shooting star formation, a long, long topping tail. I mean, it was a fall from grace intraday. We hit a high of 9,373 intraday on the Qs. We ended up closing at 9,413. So let's go, a high of 9,604. That's almost a 200-point sell-off during the trading session for the NQs. Not good, since it's been the dog that's been dragging this market to the upside, really pulling things up to the upside. Of course, you saw it actually come into the beginnings of an area of supply on that NASDAQ 100 there, but that was your number 4. Number 3 is the S&P 500, the one that's really not making me feel so good about my long-term position trade here, especially the way this market has opened up and our economy is starting to open back up. I might be dreadfully wrong on my prognosis for achieving those lows that we saw back on March 23rd, but I'm sticking with it. We'll hold it up for a little bit. Remember, it's an options play, so I knew my overall risk going in. We'll keep that one on the table. Right now, S&P 500, 2,995. It was much higher than that today. Nice to see it break above the 3,000 for anybody who's bullish, but it didn't close above it. We hit 3,019 on the S&P futures today before closing at 2,994. Sold off a little bit in our after hours. All right, that was number 3. Number 2 brings us to crude oil. Still kind of stuck here. Here's your daily of it. It had that beautiful rally on that breakout above 25 and change. Today, we actually came right back up to that level of 35 that we talked about. The high was 38.41, and it closed at 34.81, closing at $34.17. But, the longer that things stay at these types of levels where it just kind of smacks its head again and again and again on the same level, that becomes much more of a challenge for this price action. And if it does break, you see big, fast moves, which will probably take crude oil to $40 if it does get above and close above that $35 mark. All right, the big winner on the day, the Russell 2000, very significant formation here because it did break through these highs, going all the way back to the last 2 days of April. Right now, where's that next stop loss or next target for it, really? It's much higher. I mean, you're over 1,500 would be kind of where I would be eyeballing, about 1,515, 1,516. So, that's a lofty target, but that's where it's headed. Yeah, guys, here, I know some of you thought the white charts. I know, I apologize. We will have white charts surge. What happened, and this is all on me, with TradeStation, if you don't save your layout, it will go back to the previous version. And so I made all these changes to the charts and candles and colors and fonts and all that stuff. I forgot to save it. So when I opened it back up today, I was like, oh, you gotta be kidding me. So I just haven't had a chance to make a white. I will make a white. I'm actually going to do a TraderMerlin template in TradeStation. One of the things I love about it is you can create any kind of templates or screen that you want. So I'll make one that's just for TraderMerlin. I'll make it all white for you guys, so don't worry, we'll be back. I think the white is better for viewers out at home, and that's what I'll go with. All right, so that was your top 7 markets for your market update, your top 6. I cut out the 10-year, which was not really that noteworthy. All in all, what was noteworthy today was kind of the return to normal. Make that the basis for the topic of today. I kind of started there. The other side of reason why we saw such a nice market move was maybe something to do with the economic data. Now, real quick, let me show you this one just to bring it up so you guys can see it if you have not seen that. This is what happened today on the economic announcement front. What's noteworthy for me anyway is what's in the red box here. And you'll see it's really the housing price data that I was interested in. HPI numbers, and these are 2 different measurements of HPI. The one that most people follow are going to be the S&P CS, which is Case-Shiller Composite 20 Home Price Index. I actually expected to see this slide and drop even further than that 3.4 estimate. So what you're looking at here, let me get my pen out on the screen, and I have not set up my tablet to draw on this yet, but this first number, this 3.5, that was the previous. This middle one here that I'm going to put in like a box around it, that was the expectation, and here's where we came out at. We came out with a positive 3.9% versus 3.4%. So for the podcast viewers out there or listeners, last month or year-over-year change when they reported this was 3.5%. They expected it to drop to 3.4%. We actually showed an increase of 3.9% with regards to home price index in 20 major metropolitan areas. That is a very positive sign from an economic perspective, simply because when people's homes are worth more, their net worth is worth more. And maybe they can borrow more, have access to cheaper capital, or pull money out of that home. So this is another one of those fuels for a market move to the upside. Now, we could look at a lot of different things that fuel this market to the upside, but I think we'd all agree that today was one of those things where I believe, and we'll have to keep track on this, it's kind of the beginning of the new normal, that getting back to normal talk track that we've all had. I put here a picture of an individual breaking chains. Because for many people, we have been confined in our homes, we have been stuck in quarantine, we've been cooking more, spending more times with family and friends, or maybe even just making enemies. along the way in your household because you can't get away from them. So, as you guys know, I have a huge option position basically on puts, really thinking that this coming out, and not only is it, and this is my opinion, it wasn't going to be smooth. I felt there'd be a lot of hiccups along the way, and it would take some time to find out what that new normal is. I know new normal has now become this hated buzzword out there, but what is that basis or base that we all go back to now? Or I mentioned this a while back, where baseball games and football games, restaurants are going to be different. I had the opportunity on Saturday to just go to dinner. I drove around and was finding a place to eat, found a place to eat, went into a little Mexican restaurant, had a great meal, and it was just so refreshing to sit around people, even though we were separated and kind of quarantined. What is that new normal for restaurants? Am I allowed to sit next to a table with people right next to me within 3 feet, 6 feet? Who knows? So this was what made me think about doing the show today was an email that came in from El Toro. He's one of our viewers out there. That's his nickname. His name is Tom Barr. He's in the chat right now, and thank you again for the email. And he says, you've really focused a lot on the macro picture, which, again, we were looking at unemployment rates and retail sales, GDP numbers, money supply. Those are definitely really big pieces that are historic, meaning the data for those. For me to get you unemployment data, I have to go back a month, and there's a reporting lag time there, but it's all historic, actual information. Now, how believable or truthful is that information is a totally different ballgame. I don't know. I've interviewed a guy years ago on Power Trading Radio who basically said, he worked for Bureau of Labor Statistics. He says, we fudge the numbers to benefit different political parties. And I just went, well, how the hell can I, as someone who's using this information as the basis for my trades, make trades? So one of Tom's arguments was, you focus on the macro side here on TraderMerlin. What about the micro side? And I thought it would be interesting because, some of the things that you mentioned, Tom, are opinions, right? They're forecasts for the micro. For example, you mentioned when he said, I see plenty of positives supporting a stronger economy returning, including 75% of the unemployed returning to work in the near future. That's an opinion, right? I don't know whether half of the unemployed are going to return to work, 100% of the unemployed, or none of the unemployed are going to go back to work. I can tell you that I have two friends in particular, I talked to another one this weekend, who's on unemployment. And because of this extra kick in that they're doing, the $650 a week on unemployment, they're sitting around going, I'm getting paid more on unemployment than I would if I went back to work. So I don't want to go back to work. And I said, well, how long are you going to milk that? And to me, that's just being lazy, right? Just get back and be constructive and put something back into the economy as opposed to sit on your butt and do nothing and be a freeloader. That's a different story. Their argument was, well, it's going to go on to July. And I said, well, what happens at the end of July when someone is taking your job, if it even is there when you get back? He said, well, I'll figure that out when I get there. And I'm like, I think a lot of people have that attitude of, I'm making more money by doing nothing. Why would I want to go back and work 40 hours a week to make less? So I think that that's a drag down. We'll know in certain period of time how many of these people get back to work. And that's the big wild card, is what percentage of this massive unemployment number we have right now get back to work. So to say that 75% go, that's just a forecast. That's an opinion. Can't validate that until we get there. Now, here's the thing. I think that if we do see 75% of people get back to employment, that's going to be really good for the economy given the fact of how much money has been pumped in. Right now, if I were to give you a hypothesis about what is going to happen to the market, it would be this. If we come out of this smoothly and things go the way they just started out, of course, you see these idiots in, Missouri, right, the Lake of the Ozarks, right, where the TV show is filmed, Ozarks. All those guys having a huge pool party, and then there was one in Texas with that huge pool party and all this stuff, and people in an environment or situation where if this disease is really that bad, they're just basically creating an incubator for it, and all of a sudden we could have a much bigger problem going forward. We don't know. The truth of the matter is it's all speculative at this point. So we have let's say three scenarios. Scenario number one I'm going to go to, which I think Tom wanted to talk about, which is the best case scenario. The best case scenario is this. We lift this economic, handcuffs, which say, okay, businesses, open up. Get back to normal. Yes, bars, you have to wait a little while, but bars will be open soon. Of course, most bars will probably start serving food so they can qualify as a restaurant and open up the bar. That's what I'd be doing. But let's say it all goes smoothly, and in 6 months from now, we're back to our 4% unemployment or 3.5% unemployment, and everything's rosy. If that happens, you're looking at S&P at 4,000 plus. Yeah, you heard it, 4,000 plus. Why? Because you have trillions of dollars poured in, and if everything goes smoothly back to normal and we realize, okay, maybe this coronavirus isn't that big of a deal, yes, maybe it is like the common flu, as so many people are arguing, then, okay, our market's going to be absolutely out of control. I think then we might start to see hyperinflation, but the S&P 4,000 could hit no problem because of just pure capital coming back in. Plus, you also have all of these people who are unemployed have not been making contributions to their 401k programs, right? There's not that monthly payroll deduction. That all of a sudden comes back online, we could see a catalyst. That's the best case scenario. And there's a lot of people who believe that could happen. It's certainly a possibility. The middle ground scenario number 2, is we open back up our doors and we see a resurgence of the coronavirus, and we start to have some problems, and we go back to a prolonged quarantine, shelter-in-place type of environment, which will just crush more businesses. So to me, that's kind of what I think we're headed for, which is it's going to be a challenge to get this thing rolling, and we'll still work out whatever bugs are in the system. Ultimately, if you look 5 years down the road, America will be fine. We'll be probably much higher on our equity indexes than we are now, but I do think you'll see a trickle-down effect, which is, of course, why I put that position on, and right now, obviously, it's getting crushed. Let's see, another piece here. All right, and then the worst case scenario is we open back up. The beaches in Southern California this weekend were absolutely packed. Well, we know that that's what's going to happen in summer, and then people say, well, it's sunshine will kill the virus. Yeah, let's not get there. Right now, I don't think anybody really knows. I hear it's 6 feet, it's 3 feet, it's airborne, it's not airborne, it's on surfaces, it doesn't stay on surfaces, who knows what it is. But what happens if all of a sudden we go back to our normal summer routines where we're back on airplanes, we're traveling around, we're having fun around lots of other people, and we get not only a resurge of this, but a much deeper issue. That's worst case scenario, and I think there we'd see much more downside movement in the markets. All of this is totally speculative and opinion-based. It all depends on which side of the fence you're on. And Tom El Toro, you're bullish. That's 100% fine. Great. Just have a contingency plan. So if all of a sudden things do start to fall apart, you go, I'm out, right? For example, there was the futures trade that I was in. I dumped the futures trade, took a pretty good loss on that one. I'm keeping the options trade short just because I have such a long time horizon on that one, and I know I got a fixed loss amount, which I was happy with, which was $75,000. Other than that, I don't. It makes no difference whether you guys are long, short, bullish, bearish. I'm just offering what I like to feel is. Well, I guess I would always say it's got a bias to it because it's my opinion. But I'm trying to look at all the facts and figures and numbers and just come up with an idea. And I'll walk you through what that is. Of course, some of you disagree with it, but that's fine. But yeah, I really think that your stance on the market, whatever it may be, just has to be backed up by your trading plan, etc. All right. Nice, Brendan. 5% realized today. Well, Brendan says, screw the Fed. Man, that's one of the worst things. It's kind of like walking into a bar with Mike Tyson and telling him to, kiss your ass to his face. Pretty sure that's going to be a bad decision. Fighting the Fed is a bad decision. I know that going in. Fighting the Fed is one of the worst things you can do because they have unlimited pockets. I don't. And, that trade I'm in could very well end up being worthless. We'll see. We'll see what happens down the road. Okay. Let's see, Kevin, because forget that right down the street here in New York City, there was a party right on the sidewalk in front of someone's apartment. Yeah, I've seen it all over the place. I saw videos being sent around and my friends going, hey, I'm here, I'm there. I'm like, I'm not one of these that thinks that this coronavirus is as extreme or severe as they're playing it out to be. Just looking at some of the statistics make me go, it's not really that dangerous. I know that sounds crass for anybody who might have a family member who's suffering from it or someone who's passed away. I didn't mean it like that. I just don't think on the grand scheme of things, shutting down the entire economy as heavily as we have was warranted by this. But we'll see. If we get back to what people are doing right now, you're going to see another surge up, and then we'll be back in the same situation. I, for one, have actually kind of enjoyed the shelter in place. What I do miss is human interaction and hanging out with other people on a regular basis. But yeah, love my long positions and stick with them, but unemployment should remain forecast at 10% through next year. Yeah, again, Big Eb, we don't know. I don't see it dropping as quick as it rose, that's for sure. Ultimately, we are the best economy in the world. Sorry, Gayer, who's out there, and others in different parts of the world. Sorry, Brendan. He's going to say the Canadians are the best out there, but we have the most dynamic, robust economy, and we will get out of this. It's just I know that there will be hiccups along the way, and I'm one that likes to ride the hiccups. The hiccups are good for me when it comes to market corrections. All right, cool. Let me, if you have any comments or feedback, please feel free to type it in the chat right now. I'm always happy to integrate that in the program, whether you agree with me or disagree with me. I'm okay to present both those sides. I have no problem being right or being wrong. I always try to be right, but stuff happens. Let me go to some listener questions as I share my screen over here as we talk about that new normal, that return to normal. Again, I don't know what that's going to look like. I'm hoping it looks very positive for everybody. But let me go to some listener questions here as I wait for your comments to come through. Okay. Natalia sent this one. How market and limit orders work in the background. Why some get filled even if price goes across. Yes. Okay. I know for many of you, you're going to go, God, market, limit orders, this is going to go back to 101. But we're not going to look at it at the face value of market versus limit. I actually want to go back. I want to go back and look at the kind of behind the scenes what goes on. And by the way, I'll give a shout out to Brendan, because most people are very proud of their plays. Brendan says, "Are you kidding? Canada's economy is getting killed by Papa Trudeau." Well, okay. No pride there, right? No pride, no Canadian pride. How do market orders and limit orders work? The answer to that question is it totally depends on what asset class you are trading. So let's say, for example, you connect through a specific broker that is not direct access. So any of your online brokerage firms, you're talking E-Trade, Ameritrade, those types of companies, Schwab. If you do a market order there, certain things can happen. Most people's belief system is that order goes straight through the exchange. Whatever's the best price there is what you're going to get filled at. You're always going to get filled at the ask price. That's the belief. It's not necessarily true. The institutions themselves, so let's say you're I'm going to just say XYZ broker so nobody thinks I'm attacking any specific brokerage firm. So let's say XYZ brokerage firm is an online brokerage firm and you hit a market buy order to buy Microsoft. And you're looking at a level 2 screen. You can see that right now there's a price. I'll actually give you the real prices of Microsoft just so I don't, it's been so long since I've looked at Microsoft. You want to buy it at 182. And on the ask side, the ASK, so there's the bid and the ask. Buyers line up on the bid, sellers line up on the ask. If you hit a market order, you're buying it from the sellers and you are giving up the spread, the difference between the bid and the ask. So when you do that, what is really happening on a market order? On a market order, what will happen, depending on your brokerage firm, if it's direct access, you designate where it's going to go and it goes straight to the exchange. That's one of the beauties of direct access. That's why I'm using TradeStation. That's direct access. If you're using XYZ broker or an online broker, that's not direct access. And normally what happens, that order will be sent to that firm, and they will very quickly, usually with algorithms or some back-end programming, decide to sell you their shares that they're holding in their account or pass it through to the exchange. All right, especially if it's a market order. And sometimes you get slippage. Now, regulations have helped out here a lot. There were instances years ago on E-Trade, for example, I hit a market order on Exodus and I got filled $1 above the best market price. $1 on 1,000 shares, that's an extra $1,000 I gave up simply because they traded off their own inventory, their own book, not the market. So this is one of the main reasons why you'd want to go direct access. And if this isn't clear to anybody, just type it in the chat. Say, could you explain that again? Because it's critical you understand that they don't have to instantly execute your order on the exchange. They can fill it out of their own order book. The good news for us now is there is much better reporting and tracking, so you shouldn't get that $1 out of the money, but they might slip you a penny or two, and you look at the chart and go, wait, it didn't get there. They might slip you, but the only person who would catch that is if somebody is sitting there paying attention very, very closely. It's funny, on Josh's podcast that I did the other day, I was talking about people balancing their checkbooks, and how many of you really sit down at the end of every month or week and reconcile every transaction you made to the penny in your credit cards, your checkbook, all that stuff. Most people don't, right? If your checkbook, and let's be honest, show of hands, if your credit card statement overcharged you by 10 cents a month, would you have any clue? Anybody in here? Would anybody say, yeah, I would notice that right away? Just 10 cents. Pretty sure the answer is going to be no. I'm very, very good about it. I check every transaction that comes in to make sure the transactions are right. but I don't add up everything and do all the accounting stuff. I'm guilty of that. So, let's see. Let's see. Nice accent, pretty close. I wasn't doing it in a Canadian accent. Oh, Papa, tu dis, yeah, so talk like this? No, my French accent is not very good. I lived in Italy for a little while, and I really enjoyed it. No, I don't not speak of French. J-Rob says, you've heard of dark pool indexes. Nah, I haven't heard of dark pool indexes. I've heard of dark pools. I mean, obviously with dark pools. And those still need to be reported to the exchange in a certain period of time. Okay, so a lot of transactions. Yeah. Brendan would catch it? Really? Out of everybody here, Brendan, I actually thought you might say yes. Vernon would as well. Cash Girl, good job, Thomasina. So, actually, Thomasina, if you understand the way the markets work, or the way business works, you're losing money by paying cash. You know that, right? You should be using a credit card. Totally guilty. All right, you should be using a credit card. Why? I have 3 different credit cards in my wallet. Well, 3 that I use. I have like 5 total that I try to rotate. One is 2 of them are airlines cards. So every transaction, I'm getting points. So I basically earn myself a free trip, business class or first class, anywhere in the world every year by credit cards for free. I never carry a balance. I pay it all. So use credit cards. Sorry if I offended any of our French friends. My accent was pretty bad. Ma se vuoi io parlo solo italiano. Per i prossimi 20 minuti facciamo questo programma solo in italiano, eh? Sorry. Next. Don't make me go into German or Arabic or Yiddish. We won't want to do those accents. Okay, Marshall, I'll get back to my discussion here. Thank you for keeping me on track. Sometimes I watch the chat and I go crazy and I get sidetracked. I'm actually kind of impressed at how many of you would say that you would catch 10 cents difference in your credit card. It's impressive to me. I just would assume that most people go, no idea. No idea. Let's see. So to go back to Marshall's question, does Forex work the same? All right, now if you're trading stocks, let's go back to stocks. I'll finish that because I just explained market orders. Obviously, the benefit of a market order is you're going to get your shares. You might not know what price, but you're going to get them. And that leads to slippage. The wider the spreads or the thinner the price levels, the more likely you guys are going to get slipped. Does everybody understand what I mean when I say price levels? I can probably show you an example here. It's after hours right now, which is not the best time to show that to you. But let me set up a level 2 screen and see if I can... the fonts always suck on level 2. That's a matrix. Let me see if I need to make this a little bit bigger for you guys so I can show the level 2. And the reason I wanted you guys to see this is it'll show you your probability of getting slippage. All right, let me get rid of that quote bar. Bear with me. Let me just show you guys as I'm working here. So I'll make all these fonts bigger for you. Don't worry. We'll get that trade bar. I'll get out of the detail pane. I just want the level 2 and the time it sales. And we'll put in data is not enabled from Microsoft. Really? How about URBN? Urban Outfitters. Apparently, I don't have access to level 2 data on this one. So, all right, never mind. We won't be able to show you that one. So, strike that from the record, Your Honor. I'll see if I can enable that so I can show you. But basically, what it does is it shows you the number of buyers and the number of shares at every penny increment, at every 1 cent increment. Pretty important to see if you're sending large orders. It'll also let you know what slippage you might get. Slippage is, I wanted to buy it at $30 and I got filled at $30.05. Right? Where'd that extra nickel come from? Probably due to the levels and layers and the sellers that are out in that marketplace. When you use a limit, this goes back to Natalia's question that sparked all this, is when you're using a limit, you're saying, I want to pay this price and I'm not going to pay 1 penny higher. I'll pay less, but I'm putting a limit on how much I will pay. Normally, the only time that you will get filled on your limit price is if that limit price is at the ask, meaning there's somebody out there that's willing to sell it. When you have direct access, I could actually get filled on the bid price, meaning I get to keep that spread. It depends on how those orders are filled externally. So the equity markets, it's a little bit clearer, more transparent as far as how those limits versus market orders work. When you're trading with specific firms which might not be regulated, going back to the comment here about does that work the same in Forex? Forex markets are not regulated like the equity markets or the futures markets. So there is margin of error. There's room for those Forex brokers to widen the spreads because who are you trading against? When I trade Microsoft, I'm trading on the NASDAQ. When I trade Goldman Sachs, I'm trading on the New York Stock Exchange. I'm going to a centralized exchange. When you're trading Forex, for example, pick any broker you like, you're not trading on an exchange. You're trading against that firm. So you're kind of you against a bank or a financial firm. They can slip you especially if you're coming in trading big share size there, they can slip you, one pip. Well, 1 pip starts to add up every time you start slipping people. They get wider spreads, so they can move things. And they can also see when orders come in because it's their book. So if all of a sudden a bunch of orders start to come in to buy at market, what are they going to do? They're going to move their sell price much higher. So those market orders pay a higher price. So it's different in the spot Forex market. In the futures market, it's similar to the equity market, right? You have a centralized exchange, not one entity seeing those orders come in and controlling it, right? It's coming into a hub. So that's basically the way that limits and markets work there, Natalia. It depends on the asset class that you're trading is really the determinant of what will happen when you send those orders. Limit orders may not get filled, right? Sometimes they do, sometimes they don't, depending on the price. Market orders will always get filled. If your market order doesn't get filled, something's wrong with your computer. There's an issue there that you need to figure out real quick because something's wrong. Mine 10 cents. Lewis says, my 10 cents is my gift to the filthy, greedy CEOs. Trust me, your 10 cents is a rounding error to those guys. They don't care. But, it like the Office Space movie, when they rounded up a penny, and, it ended up being a lot of money. Thomasina says, Dave Ramsey fan. Sorry. In all honesty, I've never watched another show. I don't watch other podcasts. I don't watch what other people do. I don't want to influence my opinions or my show based off what other people do. I've seen that most of Dave Ramsey's stuff is very, it's kind of basic, and they just do the same show over and over and over and over again. And, if you want, I can do a show on personal investing and wealth management and how to take control of your finances. That's no-brainer stuff. It's surprising to me at how big and popular his show is, given the one-dimensional aspect I feel of his content. But, it seems like every time I see the headline, it's, what can you do to get the best rate of return in your 401k? And how should you think about buying a new loan? Well, we could all talk about that type of stuff. I could do my own show. So I'm not a huge fan, but whatever. I mean, congratulations to him for doing what he's doing. I just haven't watched it. Try not to be sidetracked by it. Let's see. We're smart. That's why we watch you. Thanks, Thomasina. How do we choose a Forex broker? In my opinion, I would do the bigger the better, right? So a little mom and pop firm, I'd be sketched out about that one. I would do your research. There's certainly some big brokerage firms out there. They are all going to have negative reviews. Every one of them will have a negative review. Just like the reason Online Trading Academy is under attack right now is because 150 people had problems. And part of those 150 people were manufactured and created to have problems. That's a far cry short of the 90,000 students and all the tens of thousands that have signed documents saying, hey, we love this content, don't take it away from us. So there will always be people who complain about specific brokerage firms, and they may even be shills from the other brokerage firms. But do your research. There's definitely forums out there, and when someone bashes a specific broker, don't take that as gospel. Go look at someone else's reviews and read through them to find them. But really, I would say stick with the majors, stick with the big ones. Let's see. Yeah, Randall's right in my wheelhouse, which is, he says, pay with credit cards, just never carry a balance. I did a whole credit management course for Online Trading Academy. I'm thinking I'm going to actually do one here, because to me, having great credit is one of the most powerful things that you can do. I took a picture of it the other day. I hit a lofty level that I'm extremely happy about. I got 850 on my credit score. For those that might not know, 850 is it's the highest you can get with your credit score. So there's a lot of real simple things you can do, but one of the easiest ones, like Randall says, is you use your credit cards for everything. Everything. I buy a pack of gum, I'm using my credit card. Why? Because it's automatically paid in full every month. I will never carry a balance on that credit card, ever, and I haven't for decades, which is why slowly my credit score is just building up, and it's at its peak. So there's a lot of things that you can do. Sure, Mark. Mark says Ramsey will take a person from an F to a B minus in their finances. I think I could take you guys to an A. I think if I had the time and effort, I could take you to an A for sure with your credit, with your finances. Let me see. Oh, for some reason, nothing has happened. I'm gonna make sure my account number is not on the screen, but I don't know if you can see that. There we go. There's my credit score right now, 842. It's hard work, man. I worked really hard for that. But what a good credit score means is you now have access to much more capital. things are going to be easier. Even if you're applying for, you're trying to get an apartment, you're trying to buy a car, you're trying to buy a home, trying to get a loan or a credit line, an 840 credit score, you're good. Just you take what you want. You get a 720, it's like, okay, we might have a couple little problems here and there, but you're fine. Anyway, we could go on and on about that. Let me see what else we got. Which credit card is best for airline miles? Are they free or fee-based? From Mike. It's a great question. Let me show you a resource for you. And we went on a total tangent here today, guys. This is the squirrel moment. Let me just show you something over here. I'll go to I use this website called creditcards.com. It's a real simple one. Let me just bring it up here, and I'm gonna go control. Let me just. It takes a second here to load up. I'm not sure why Let me take that bookmark bar off. Okay, one second when it loads up here. I'll show you this real quick for anybody who might be interested. And it's a resource. There's a lot of credit card stuff here on this website. This is just creditcards.com, and I am under no affiliation with anybody. Please, guys, understand I'm not here promoting any of them, so do your due diligence. Okay. If you want an airline card, you just go here to card category and go to travel, right? And here's the game that I play. I actually wanted to do a video for OT Academy a while back that basically said how to travel around the world for free. Would be a great one, huh? I think that'd be a great class to have. So now what it's doing is you can scroll down and it will show you some of the best ones. For example, this one, earn 5 times on Lyft rides. Nah, that's the sponsored one. Here's Southwest. They will give you 40,000 bonus points if you open up this card. Annual fee of $69. All right. So what I do is I will usually go to like the United card has been pretty good for me. I'm probably not gonna be on here. You find one that gives you kind of the most perks, and some are free, some are not. And also, again, it really depends what type of travel you like to do. Like, I'm not going to use my points to travel domestically. It makes no difference for me to go from California to Jacksonville, Florida, first class. That's 5 hours. But if I go international, like I'm going to Thailand or I'm going to Vietnam or Russia or Australia, I'm using my business class on those flights. And for anybody who's traveled on international flights, you know that being in the bus in the back or the back of the bus where you're packed shoulder to shoulder with some guy who's got coronavirus or sneezing and snoring all over you is terrible. You're up in business class, that's a whole different ballgame. I mean, better food, you're sleeping like a king. Oh, it's wonderful. Use your card and points for that. So to this example here, I have this card right here, 50. So they give you 50,000 miles. I believe 36 with them is a free round trip ticket anywhere in the U.S. So you're automatically getting a free ticket. Now, notice right here it says $99 waived for first 12 months. Well, what do you think I do? I open up this card. I charge everything on it to get as many miles as I can. I get that 50,000 mile bonus, and then I cancel the card in 11 months. I have a calendar in Google that has all my credit cards. It's called Credit Card Calendar, and I just cancel those credit cards after 11 months if they charge me a fee. And then what happens is I will wait a couple of months, and I'll open it back up again. Sometimes they say no, and you say, okay, try to get another couple months, and they'll open it up again and give you a 50,000 point bonus. So, in about a year, you can have a first-class ticket anywhere in the world based off of those point values. Some are free. So, for example, my personal favorite right now is the Discover It card. That's this one right here. Because I pay a lot of bills and utilities and things with my credit cards, it's just signed up. If I keep canceling all the time, I have to go back and change all these numbers and data. It's garbage. So I use the Discover It card for anything with a recurring payment, like my cable bill, my internet, my phone is all done on credit cards, and it's paid in full every month. That's the key. Automate it. Set it up where you are paying your full balance every month, so you never pay a late fee, you never pay a percentage fee, and you're basically using borrowed money for free for 1 month while you can do something else with your cash. That was going back to Thomasina's first question. Lewis, 778 is pretty damn good, man. Yeah, honestly, especially you get over 800, that's the creme de la creme. All right, let me see here real quick. Dave Ramsey says, never invest in single stocks, only mutual funds, mutual funds, mutual funds. See, right there? I call BS. I love to, you know what? If anybody watches Dave Ramsey, throw it out there. Be like, hey, Trader Merlin says you're an idiot if you use mutual funds. You're throwing money away. So, Dave, why are you telling me to use mutual funds when I can go to an ETF and save myself 1%, 2%, 5% a year in fees? Take that, Dave Ramsey. No, I am not buying mutual funds unless I have no other choice. Man, really? Does he say that? Wow. Well, Dave Ramsey clearly doesn't understand ETFs then if he's recommending mutual funds. If you have the choice, there's no way that you would do that. It's like saying you can go to the store and you can buy one can of Coca-Cola for $1. But wait, you can get this can of Coca-Cola for 85 cents. No. I want that one. I want that one. It's $1. Yeah, that's mutual funds versus the ETFs. All right, what else do I got from you guys out there? Awesome, Gretchen. 805 is pretty good, too. Kevin says, I'm in Puerto Rico. To me, Jeff, you're in Puerto Rico? Nice. I was just there. I love Puerto Rico, actually. I wish I spent more time there. I went on a river hike up in El Yunque National Forest. That was pretty awesome. Let's see. JetBlue flight. Yeah, right. So if Kevin's in Puerto Rico and he wants to go back there a lot, you find the airline that gives the best rates or has the best service or best flight routes to your destination you want to go. In this case, it's JetBlue. So you know what? Get a JetBlue card, right? Why not? Well, Marshall, I'm probably not going to get marketed by churches. I'm pretty sure drinking whiskey and cursing on a show is not going to be very well supported by the church. This turned into a credit card show. I know. Sorry, Kev. It just, you know what it is? I can go talk about whatever you guys want to talk about. Not that I'm an expert in everything, but credit, I'm an expert in. That's one thing I'm really good in. My dad taught it to me many years ago. So I'm passionate about it, and I feel it's an Achilles heel for most Americans, and it's an easy thing to fix. Every time I see these, we'll fix your credit right now. Call 1-800. Yeah, these are suckers, right? They're going after people who believe they can't do this on their own. Just like I believe you can be an investor on your own. I believe that you can be anything that you want pretty much on your own. Obviously, I can't be a basketball player because I'm 5'8", but most things we could achieve through study, practice, getting out there and actually doing something on a regular basis. And you start with one credit card. If that's all you got, start with one credit card, set it on auto payment, and now make sure that every month you have enough in your bank account to cover that payment. That's obviously key here. All right. Well, Marshall, you can help promote our show. Credit Karma is great. Yep, that's good as well. I mean, there are a lot of services out there that will help you improve your credit score. But honestly, I believe you can do it all. There are some great videos. If you can't wait for me to make them here on TraderMerlin, you can go to otacademy.com. There's some great stuff that I produced out there on how to increase your credit score. Whoop, whoop. Nice, Chuck. Cool. What do you think about Top Step Trader? I don't know about Top Step Trader. I'll write it down and check it out. I've actually heard the name. Well, here's my big problem with some of these firms. I don't know which one Top Step falls into, but generally trading firms are going to fall into one of three categories. You're going to get the people who paint themselves as amazing traders, never really have any truth or background, never have any background or proof that they're doing well, and they're going to sell you a monthly subscription service, and they'll give you a couple picks or some levels and zones, and you go, oh my God, this guy's so great because one of those zones worked, and he'll give you 50 of them in a month, but he'll isolate those two that worked and go, see, look, I'm great, you should keep paying me. Those are the ones that are most common out there. Number two are going to be the ones where you actually put in money, right? And they will trade that basket for you. So it's almost like a prop shop prop shop is where you put in money, they'll match it, and you get a percentage of the winnings, but you also get responsible for the losses. So those are your predominant three, where you put in money and they'll invest that money for you. The other one is where, and I think Top Step Trader might be that one, where you follow their trades or picks if you want. So I don't know. I'm not a believer in those. I believe that if you understand the basics of how markets work, you understand the basics of price action, you don't really need anybody to tell you what to buy or what to do, because you should have the ability to look at that market and go, that looks like a good buy point right there. You know what? I'll make that trade. Let me check the reward to risk ratio. The reward to risk ratio match? What's the overall market look like? Are we in a bullish market state? Great. I want to go long this stock as well. That matches. Am I in an area of demand? How do I know it's demand? You quantify it. You run through your odds enhancers. You check those levels to make sure that zone is good for you. It's not guaranteed to work, but all we need to do is put odds in our favor, and then we move forward from there. So, putting your money into somebody who trades your money for you, I think that's just a bad move. What happens when they start doing shady things or run away with your money, or their strategy doesn't really work? I'd rather be responsible on the hook for my own bad trades if I'm making bad trades, so I can learn from them. Yeah, this is Active Investor is a great class, I will say. Oh, thanks, Brendan. I try. YouTube trading channels are a cult. Yes. Yes, like SS. Specifically mentioned. Yes. Chuck focuses on daily market overview at Trader's Army Morning. Pretty good stuff. Yeah. And there's certain people. Okay, let's just take a step back there. There's also certain people that I like and think provide value to you, right? Obviously, I am aligned with Online Trading Academy because I love what they've done. I've been a part of it for so long. I help build that content, and I feel passionate about it. But Chuck and his team got some really good people in there. Justin Krebs is fantastic. Corey Lane's great. There was another one that was mentioned here in chat. I wouldn't touch with a 10-foot pole, but that's just me. All right, what else we got? Let me see. I think I had another question. The clock is going since you guys turned this into a credit card show. Let me do one more question. If you guys have one, send it on in. Otherwise, I'm going to go to one of the viewer questions I had here. Let's see. This was similar, so I'm going to actually do this one. It's a friend of ours from Australia. We've got the man down under. So if one podcast, no, that was going to go Irish there. I could almost do a Australian accent, mate. Anyway, okay, mate, let's talk about it. With most platforms, having apps is being able to set up alerts. I've found more success setting alerts and closing trades when getting alerted when it closes below my distal line and use smaller size positions. Do you trust a broker that can see your stops to not manipulate the spread to close out, especially in the Forex markets? Okay, terrible accent for Australia, so Fink, I apologize. That was just horrible. This kind of ties back to Natalia's question on limits versus markets. I don't trust Forex brokers because they can't see my stops. I don't, and this was actually really exemplified for me when I was over in Europe. So if I have any, we're not going to do an hour and a half show, Jimmy. Forget it. When I when I was teaching at the Online Trading Academy in London, which is actually in, it's St. Albans, but they called it London. Little Kiwi and Aussie. I was invited to go to one of their CFD trading firms. And you know how we all have, our monitors are 16 by 9, so they're wider than they are taller. Well, these guys had them stacked sideways, and all they had was the list of all of the stop orders for their clients. And the guy sitting there, he goes, oh yeah, we can take stops out at any time that we want because it's not going to a centralized exchange. It was just trading against that firm's account like Spot Forex can. And the guy goes, oh, watch this. And he took the price of whatever the underlying asset was down, just dropped it real quick, took out like 50 stops because there was a big block of them there, and then it bounced right back up. And I went, this is not right, And it's what happens behind the scenes when you don't use a centralized market, which is, again, why I really like to push for the equities, the future side of things, because it's centralized, and I have a small amount of capital in uncentralized markets like cryptos, like the Spot Forex market, because they can see it and they can jack your stops. They can't mess with you if they want. What are the odds of them getting caught? I think I told you guys years ago when I was in Italy, I watched a ticker symbol, and I can't exactly tell you what the symbol was. I'm trying to remember, it was so long ago. But I'd sit there the night before, I watched spike like 10 times normal volume. It came up on a screener for volume breakouts, which I like to look at. Volume spiked up tenfold. I'm like, holy cow, look at this volume, man. Something's going on here. The next day, they reported they were being bought by Sony. And of course, what happened? That stock jumped up huge. It was like a 30% gainer the next day. I called the SEC, the Securities Exchange Commission. I said, hey, listen, I have the clearest example of insider trading that you were ever going to see. There's no way you could justify this 10 times normal volume at the last 15 minutes of the day. Look historically, every day going back a year. It's never happened. And all of a sudden it happened this night before this major earnings announcement. Somebody knew. And if I'm the SEC, I should be able to go in there and say, you know what? I want to pull the records. Who were the big transactions? That was insider trading. Clearly. I left multiple messages, and finally, I left a very nasty message, which included a couple of F-bombs. Basically said, do your frickin' job. You guys are here to protect us investors. This is one of those things that you're supposed to be doing, and you guys do nothing. He called me back, and he was a little upset that I was using the language and tone. I said, listen, you're here to help us and protect investors. You're doing nothing. You're letting somebody get off with tens of millions of dollars. At the end of the conversation, guess what he told me? Well, what I'd like you to do, if you would, is send me all your screenshots, all your information, and write up exactly what you're seeing and why you think this is insider information. So I just said at the end, I said, so basically you're telling me that you want me to do your job because you're lazy and don't understand how the markets work. And I just hung up the phone, and I've had a disinterest in the SEC, Security and Exchange Commission, ever since. the ability for us to do things and be caught from an institutional side it's minimal. And if they do get caught, if these brokers or market makers do get caught slipping your orders 10 cents or taking out stops, they go, oh, sorry, we'll pay a small fine, but we've made $100 million off of you. We'll pay, a $50,000 fine, and they do it all over again. So that's just the nature of the beast. Unfortunately, if it was you or me, we'd go to jail for it. But these guys just get a little slap on the wrist, and then we move on. Or in Forex, the spread at the end of the day is notorious for that. Yeah, certainly. And there's certain, when it rolls over to different trading sessions, you'll see those spreads widen and get more narrower. That's why, there's certain things you can add to a platform, like it'll tell you what the bid-ask spread is. So if the pip spread on spot is, let's say, for a specific currency, it's, 3 pips. Okay, great. If all of a sudden you see at certain times of day it spikes up from 3 to 15, probably don't want to be trading that time of day because all of a sudden you could be subjected to more slippage. And you'll see it spike and happen during more times of the day. Maybe in a future show, I could show you some of that stuff. Dave Stewart says, unless your name is Martha Stewart, remember, she didn't go to jail for insider trading. That's not why she went to jail. She went to jail for lying under oath. Perjury. Is it perjury? I think perjury. Yeah, perjury, I believe is what she was guilty for. Oh, Brendan, he says JP Morgan was manipulating metal prices for years. Let's not single out JP Morgan, guys. You can give me any brokerage firm. Any. Pick one. I don't care what it is. You can pick any brokerage firm. They are doing something that's going to make them extra money, and until they get caught, they will keep doing it. Oh, Deutsche Börse, USB, Bank of America, Wells Fargo, JP Morgan Chase, all of them are doing things that are going to try to increase their bottom line because they need money for their shareholders. And then, like I say, if you knew that you could walk into a store and steal a $1 Snickers bar and steal it, and if you got caught and the police are right there and they made you pay a fine of 25 cents to steal that $1 Snickers bar, you sure as shit can bet I'm going to go back to stealing Snickers bars. Because my only risk is I got to pay a quarter for something that was $1. It's the travesty of the financial markets. It's that type of weird double standard where if I was to do or steal something from a corporation or insider trading, I could go to jail. But these guys don't. They just pay a fine. Oh, I wasn't guilty. I'll just pay a big fine. Yeah, Wells Fargo made up fake accounts, right? There's another one. They're all doing something shady. That's why, on the program the other day, I still believe that the financial markets are the most vile, cheatful, deceitful, thieving institutions in the world, but they're a necessary evil. It's the sandbox that I chose to play in. So as much as I hate them, they're there for a reason, and I'm trying to prevent them from doing financial harm to me through my understanding of financial markets. Yep, banks don't lose. They'll lose every now and again just to make themselves look good, but for the most part, they're not going to lose. All right. Thanks, Gretchen. You like my accent? Yeah, that's good. Cool. Well, excellent. I went off on some very big tangents here today. I'm actually going to be working on a couple things. I'm trying to get Bob Dunn on the program. A lot of you have been asking about Bob Dunn. He's doing a signature series this week in Florida, so he mentioned he can't come on this week, but maybe he'll come on next week. So I'm going to try to get a few more guests on the program. Obviously, trying to get more diversity out there. I just haven't put a lot of time or effort into going and get new guests because I'm trying to build other content for you guys. But I will do my best. If you have someone in the industry that you would like to have on the program, unless his initials start with S and S, they're welcome on the program. So you just let me know. You can go to TraderMerlin.com and send in that name or person, or have them contact me at TraderMerlin.com. For the most part, it'll take a lot for me to not have them on this program. What I'm not going to do is I'm not going to bring people on who are just going to be hardcore selling, shoving stuff down your throat and give you nothing of value. So, I can't guarantee I'll have everybody on the program, but I'm happy to bring on other people. Hell, I'd love if you want to get Dave Ramsey on the program to talk about why he wants to pitch mutual funds, and we can have the mutual funds versus ETF debate. Then, heckle him. Say, hey, get on Trader Merlin show. Let's do it. All right, Dan Sugar, cool. Peter, am I still with OTA? Yes, I'm teaching content for OTA, or not teaching. I'm building content for OTA. Probably not going to do any teaching, but we'll see. Right now, I'm just building content. I'm trying to get Strategic Investor done, which I think is one of those classes that everybody should take. We should all understand simple strategies to generate income streams in our retirement accounts and 401ks, IRAs. Because look, I think that what we're in right now is a further burden on Social Security or any government support for your retirement when we finally get there. So be careful. Yeah, Orion Watkins actually said that he's going to be on the program. So, yeah, I'll get Ryan Watkins on. F and S. No, SS. was the not allowed on my show. All right, cool. That will do it for today, everybody. Oh, no, wait. That's not going to do it for today. Hold on. Jeez, don't get all excited on me. I got to go to your economic calendar because there is a little bit that's interesting here tomorrow. Not a lot. This is tomorrow's earnings calendar, guys. You don't have a lot here of interest. Autodesk maybe. Workday. Workday might actually do pretty poorly here. Oh, no, I'm thinking of WeWork. Never mind. NetApp also reporting earnings tomorrow, but that's pretty much it. When you look at the economic side, that's where we do have some nice announcements. Here's your economic calendar for tomorrow. You have the Richmond Manufacturing Index and Beige Book for the U.S. Other than that, you do have some home price index for the U.K., the Euro coming out with German preliminary CPI, and that's pretty much it. The ECB President Lagarde will be speaking, and that's always interesting, but that's going to happen a little bit after midnight our time in California. So if you're East Coast, it'll be about 3:30 in the morning, which means it'll be impacting your markets on the open if she says anything that's noteworthy or not her, but Sam Evans once a week. I wouldn't mind having Sam on the program. Yeah, Sam Evans is great. I really like Sam Evans. Cool. Oh, that's kind of cute. Gretchen says my husband just adopted a black kitten to be his companion while he is truck driving around the United States and Canada in his second career. That's nice. Yeah, Chuck's got it. Sam Seiden is the one I don't want on the show. Okay, cool. Well, that'll do it for me, everybody. Hope you had a fantastic day out there. It's probably going to be an even more wild week, given the way that things happen. It looks technically like you're going to see bullish markets tomorrow. However, we didn't close above that 3,000 level. We have kind of, I almost want to call them shooting star formations. We certainly have a shooting star formation on the NASDAQ 100. That might be a little bullish trade. We'll have to wait and see how that one pans out. I might make some short trades on it if we start to break those lows. Other than that, I think you're going to see a lot of volatility this week as we start to let those dominoes or chips fall where they may with regards to us getting back to normal. Hopefully your lives are getting back to normal, especially for those who live in Texas. You got it made. Right now, California, we're still got some issues, but hopefully we'll be back there soon. Until then, happy trading, everybody, and I will look forward to seeing you guys on tomorrow's show and hopefully have some guest announcements for you. Take care, everybody.